In the world of healthcare, there are these giant companies we all know by name, but behind them there are these invisible engines that make the whole system actually, well, run. Today, we're pulling back the curtain on one of the most critical companies you've probably never even heard of, Cencora. They are, quite literally, the hidden architecture of modern medicine.
I want you to think about something for a second. How do all those countless life-saving drugs, we're talking everything from a simple prescription to the most complex cancer therapies, how do they actually get from a factory to your local hospital or pharmacy? Who is making sure that critical life-or-death link is never, ever broken?
Well, the answer is a massive global logistics and solutions company called Cencora. They are that circulatory system. They're the incredibly intricate, high-stakes network that makes modern medicine even possible on a global scale.
Okay, so to really wrap your head around Cencora's power, you just have to start with its sheer scale. And I'm not just talking about a big company here. We're talking about a global titan whose financial footprint is almost hard to believe. Get this, $321 billion. That's Cencora's revenue for just one fiscal year. To put that into perspective for you, that is larger than the entire GDP of some countries. So this isn't just a number. It's a measure of their immense, almost unbelievable influence over how medicine flows around the entire world. And you know what? They're still growing, like crazy. But hey, huge revenue doesn't always tell the whole story, right? A company has to be healthy. And this is where you see the real story. Cencora isn't just getting bigger, it's getting way more efficient and profitable. I mean, look at these key metrics like operating income. That's what they actually make from their core business, and earnings per share. Both are growing by a staggering 16%. That just screams operational strength.
So how does a company this huge build such a powerful competitive advantage? What investors call a moat. Well, the secret is in a very specific, super high-value part of the market.
And the key to it all is this term, specialty pharmaceuticals. Now, these are not your everyday prescriptions. We're talking about sophisticated, often fragile, and very high-cost treatments for really complex conditions, like cancer and rare genetic disorders. This is the fastest-growing and most profitable slice of the entire drug market, and Cencora has made it their absolute specialty.
So where does this specialty focus really pay off? Right here. The U.S. healthcare solutions segment is Cencora's absolute powerhouse. I mean, it makes up the vast majority of their revenue. This is the engine room, and it's specifically tuned to dominate the most profitable corner of the market, those advanced drugs for cancer and rare diseases.
And that really is the crucial point. Yeah, there are other big distributors out there, but Cencora has carved out this unique position for itself. It's not just about moving boxes from point A to point B. It's about providing these complex end-to-end services for the most advanced medicines on the entire planet. All right, so dominating the present is one thing, but how is Cencora planning to lock down its future? Well, they're not just sitting back and relaxing. They're riding a massive wave of powerful trends that could fuel their growth for many years to come. This number right here, this tells you everything about their confidence. It's Cencora's own long-term guidance for annual growth in their adjusted earnings per share. I mean, for a company this size to forecast growth in that range, that is a really bold statement about the road ahead. And that confidence, it's not just talk. It's built on what's basically a perfect storm of growth drivers. Just think about how these pieces fit together. We have an aging population that needs more complex medicine. At the exact same time, pharma innovation is just exploding with things like cell and gene therapy, which is exactly Cencora's sweet spot. Then you add in blockbuster drugs like the GLP-1s and a billion-dollar investment to make their own network even smarter, and you can see how all these forces combine into this powerful, self-reinforcing recipe for growth. A great growth story is one thing, but you gotta have the numbers to back it up, right? So let's take a peek under the hood at the financial engine that's powering this absolute titan. If you're an investor, this is what you absolutely love to see: reliability. Cencora has increased its dividend for over 20 years straight. The recent 9% hike shows how confident they are, and that low payout ratio, which just means they only use about a quarter of their earnings to pay the dividend, leaves them tons of cash for reinvesting and, you guessed it, future increases. And this is the fuel for that dividend. In just a single year, Cencora generated around $3 billion in free cash flow. That's the cash that's left over after you run the entire business. And it's what gives them the firepower to reward shareholders, buy back stock, and make strategic investments, all without having to take on a bunch of risky debt. So what does this all mean for its stock price?
Well, right now it trades at what's called a forward PE ratio of around 18 to 19. That's just a valuation metric, and for a company with this kind of double-digit growth potential, that's actually considered quite reasonable. And it seems like Wall Street analysts agree. Many of them see significant upside from here, with some even predicting a path to over $440 a share. Okay, so we've seen the massive scale, the super sharp strategy, and the rock-solid financials. Let's boil all this down to the core investment thesis. What is the ultimate story of Cencora? Here's the balanced view. The case for Cencora is incredibly compelling. It's an essential business riding these powerful long-term trends. It has a clear leadership spot in a very profitable niche, and it's super shareholder-friendly. Now, on the flip side, you always have to consider the risks, like pressure from competitors on pricing or maybe some big regulatory shift in healthcare. But when you weigh it all, the core thesis is really this. Cencora represents a rare blend. It has all the stability of a defensive healthcare company that people need in any economy, but it also has the exciting growth potential you typically have to look for in other riskier sectors. And that leaves us with one final big thought. As medicine keeps advancing, becoming more personalized and way more complex with things like cell and gene therapies, the need for a hyper-specialized logistics partner only becomes more and more critical. So the real question isn't just about Cencora's growth today, it's whether its role at the very center of future medicine could make its dominance pretty much unbreakable tomorrow.